All right, hey everybody, we want to welcome you to the Heartland Multifamily Show, the place
for all things multifamily.
For all things multifamily, and I got to tell you, I'm excited about this episode. Trot and I mean, how excited are we today?
It's different. It's a whole different production crew. A little bit better than me, I would say.
Oh, you know what?
Different
You
location.
This
is great. This is great.
Look, you do great. You're doing just fine, and this is an episode that we're really excited about. And before we go ahead and get into this show, I want to make sure that I remind everybody that if you like what we talk about on this episode, if what we talk about here resonates you, make sure you click that subscribe button. And make sure you not only join us for future episodes, but some of our past episodes as well, because I know for sure what we're going to talk about today, especially with our esteemed birthday boy guest today, is going to, I think, resonate with many people. And so with that said, I want to introduce Raul Villacis. It is just a pleasure, man, having you here. Thank you so much for being here.
I love your energy. I love the fact that you actually pronounced my last name correct, man. It was awesome. We were doing a session with an AI, and the AI got my last name
I think
wrong.
they called you Vasquez or something.
Vasquez.
And Raul, you've been a big part and have had a big impact on me, my business and my family, for quite a while. And when I say it's really an honor to have you here, man, I really, really mean that.
Thank you, brother.
And so having said that, I mean, I know a lot about you with our connection. Trot knows a lot about you. Why don't you mention, with those folks watching and listening, just tell them a little bit about you and what you do.
Well, first of all, thank you for having me. Well, you're actually in my studio, but thank you for interviewing me here. But I'm the founder of the Edge program. The Edge program is a community of businessmen that I help find their edge. Why did I start doing that? My background is in real estate. I'm a real estate investor. I own a real estate brokerage. I didn't sign up to become a coach or a mindset mentor. It just happened when I lost my edge. When I lost my edge, I went to a journey of depression. I went to a journey of drinking every single day. I was self-sabotaging my business, self-sabotaging my marriage, and I went to a dark place until I figured out that I have a choice. I could either ask for help or I could stay there. And I didn't want that to be the legacy for my family. So I invested over $500,000 in personal development. I went to all the seminars, traveled all over the world, so I could find out what I teach now, which is having the edge means having the energy, the determination to be guided by a higher power, a higher version of you, to execute. And why do I work with men is because I'm a man. I identify myself as a man. I have a wife, I have a daughter, I love them, but if you tell me to explain what women think, I will not be able to do it even if you pay me $1 million. So I choose to work with men because I have experience of being a man.
Man, I want to tell you that I know from our conversations, your journey has not always been easy. And I want you to know I appreciate your journey for where it's brought you and how it's impacted me and folks like Trot and other members of my team, my family, man. So again, thank you very much. And so let's talk business, okay? Let's talk business because, I'm going to go to Trot. Trot, what is, especially within the last, let's say, 30 days or so, what has been one of the most frequently asked questions that we get, whether it's emails or we're on the phone with maybe one of our investment partners? What's the most frequently asked question that we've been getting?
Well, I mean, you could take it back even farther than 30 days. I think it's been the same pattern for maybe even 12 months, and it comes with the increased prices and higher insurance or interest rates, and it's when is the right time to buy real estate? All this stuff is going on. Is now the right time? Is it 12 months from now? Am I too late? Is it 12 months earlier? So yeah, we get a lot of questions of when's the right time, Darren?
Yeah, and when should I be doing this?
So I'll tell you when I started real estate, okay? I was working for a company as a temp in my 20s. It was a temp agency, okay? And I looked at the guy who hired me. It was a big corporation, and he had the corner office. said, man, I want his job, man. I want what he has. He looks
Right.
like he has it together. Then every day I will see that he eats the same thing. It was tuna sandwich. He'd drive the same car. It was a Subaru. And he'll almost wear the same clothes. So little by little I started thinking, you know what, maybe corporate life is not for me. Maybe this is not what I thought the movies would show. You know, I'm in my 20s. I'm looking to see who I want to become. And then I began to pick up a book. Somebody gave me a book called Rich Dad Poor Dad. And that book changed my life because it started talking about how, liabilities, assets, how cash flow works, that the best investment is to buy a property. So I said, I'm going to see if I qualify. So I went down to a real estate office. They checked my credit. You have a temp job. We could work with it. And they qualified me for a loan, first-time buyer, to buy a house.
Awesome.
So I told my boss that I was going to get a house. And he laughed. He was like, oh, you're going to buy a house? Why are you going to buy a house? Like, who are you to buy a house? So that put a little sting on me. I said, I'm going to buy this house. So I bought a multifamily. Mm-hmm. 2-family with an apartment, a third apartment. I lived in the third apartment. The 2-family the house paid by itself. And then the book kept on saying, you have to find another one. So I bought another investment property, a second one. But this time it was a fixer-up. It was to flip. I flipped it. I made $100,000. I never had that kind of money in my life at one time. I'm like, man, I am rich. I'm rich, man. So what do you think the next thing I did with that money was?
Well, you spend it on something, right?
Down to the BMW dealer.
Yeah, you got the Jag, you got the BMW, right?
BMW. It was red, black interior. Gave the down payment. The problem was that I didn't finish the book yet. So halfway through the book, it says the worst investment to make is a car. If you have the money to buy a car, buy another piece of property. So I went down to the BMW dealership. I said, I'm sorry, I made a mistake. I can't afford it. I need to give my money back. BMW is known for the customer service, so they gave me back the money. And I went and I bought another one. And I remember my boss was furious. He was like, you buy 2 properties. I only have 1 house. You have 2 houses. And I said, I don't want to end up like you, man. Like I actually gave my resignation. I told him I'm going to become a full-time investor. So at that time, I did it because I wanted to have immediate money. Mm-hmm. Then I started thinking about my family. I brought my brother into the business, my sister into the business. I started a brokerage. Yeah, my biggest regret is not buying more properties.
Sooner too, I imagine.
I was in my 20s, so as soon as I was able to buy it, I bought it. So it was more like I didn't buy more.
Yeah.
I got a message this morning. I don't know if you have. We'll shout out Papa David, the app Minek.
Mm-hmm. I do.
You know how people contact you through the Minex and ask you questions. Somebody sent me a question this morning asking me that question. What's the biggest mistake that people make when they're buying investment properties? So the biggest mistake is not thinking long term and buying more often and thinking only short term. Right. So I think that right now, if you're sitting here and thinking, I'm going to buy it, I need the money in 1 year, well, real estate is not a good investment for you maybe in 1 year because it's going to take you some time to develop some equity. Right. Think 5, 10 years, even longer if you can, because that's where the compound effect is where you're going to get wealthy. You get rich by flipping, you get rich by making some deals, but to acquire wealth is long term. Yeah.
And what I appreciate about what you just said is I can relate with the BMW story, by the way, a lot. Totally get that. And the other thing about that is you're talking from someone that's been there, done that. This isn't theory. This isn't, here's kind of what I think. This is you going down that road and getting your hands dirty, so to speak, with that experience. And so when it comes to that, when Trot and I get these inquiries from our investors and from folks maybe looking to do something with us about that question again, when is the right time? Is now the right time? Are interest rates too high? Is the market, we got a presidential election coming up. And our response to them has always been, every time you think that, you're really putting yourself in a position to not move forward, because our experience has been, with over 30 years of it, has been, now is the time to buy. Any time is the time to buy. There's always opportunities out there. I mean,
so let me tell you what I think about that. there's different classes of assets in real estate.
Okay.
So if you say right now, is this the right time to buy a condo in Miami Beach? Maybe it's not the right time because it's the highest it's been.
Yeah.
You're not gonna rent it for what you're paying.
Right.
But in the multifamily, absolutely, man. In the multifamily, like you're leveraging your tenants for risk. Like if you have a multifamily, what's the average number of units that you guys buy?
On average, it's a little bit over 100.
100.
Right now.
So if one tenant doesn't pay the rent, you're not gonna be foreclosing.
Right.
Right? If
Right.
you buy a condo in Miami for $5 million, that tenant doesn't pay the rent,
Yeah, you got a problem.
you have a problem.
Yeah.
So it's a whole different. So when people are listening to this podcast, I hope that they understand that you're not selling real estate per se. You're selling the opportunity to invest in an asset class that has very little risk or is very manageable risk that's backed by real estate, which is a solid asset class.
Yeah, and with your experience, especially with entrepreneurs and the coaching that you do with them, what would you? And I know you just mentioned a little bit about maybe the thought process that people should go through, but based on your experience in working with these high-level entrepreneurs day after day, what kind of advice would you give to investors that are thinking that they know real estate's a place to be? It is maybe specifically multifamily, maybe not, but they know they need to be but they keep putting the foot on the brake about doing something. What kind of advice would you give
One question that
them?
I ask anybody that wants to invest. What are you afraid of? Make a list of all your fears. So there's going to be logical fears and there's going to be illogical fears.
Right.
Okay? The illogical fears, like, oh, what happens if there's a crash? Okay. If it's a crash, we have to make sure that we manage the crash, right? Illogical fears are, what if the house burns down? You have insurance, right? It's not logical because now the logic behind it is like you have insurance, right? Now, the reason most people right now may not be willing to pull the trigger is because of fear. How do you overcome fear? Is now you look at the track record of the person. If you're an entrepreneur, if you have money right now, you are treating that money is not making you any money sitting in the bank account.
Right.
Or if you put it in the stock market, it depends on if you know what you're doing or who's managing it. I look at real estate as a very secure asset class. Why? Because it has people in it. People are not going to all of a sudden say, you know what? I'm not going to live in the house. I'm going to live in the streets.
Right.
You know what? I want to live in the corner right there. I don't like my house. That's never going to happen. So the logical thing is to invest in people in the number one, the number one expense that they have, which is housing. People are always going to need a place to live.
Right.
People are always going to have a roof over their heads. So that is a safe investment. Now, the track record of people that you invest with, that is the main thing that you have to really look into. And with you guys, 30 years, I mean, it speaks for itself. I mean, you have all these guys in YouTube saying, hey, invest with me, and you see that those guys it's a scam. So definitely be careful. Not every investor is the same, just like not every real estate deal is the same. Do your due diligence.
Yeah.
How many people called you up to invest in crypto?
None.
Well, they called me up to invest in crypto a lot.
They do?
And actually, a quick story, I was going to put $100,000 in Bitcoin when it was $100.
Oh my God! What is it today? I mean, as we're recording this,
70,000.
Okay,
Yeah.
it's 70
I
right
could
now as we're
have
recording this, right?
Billions of dollars, if not hundreds of millions of dollars.
Wow.
I don't know the math, right?
Wow.
My investor and I decided, let's just put in real estate. We did good with that $100,000. We turned into $1 million, but it didn't turn into hundreds of millions of dollars.
Wow.
So it just depends. I mean, now looking back, yes, I should have gone to Bitcoin, but I still made money on real estate. But somebody called me with an NFT, invest in NFT. I lost hundreds of thousands of dollars in NFTs. Why? Because it wasn't a secure asset.
Yeah.
It was hype, but I could take the risk. As a matter of fact, I didn't lose it because the project went down. I lost it because somebody hacked into my computer.
Man.
All of a sudden, I had $150,000 worth of Ethereum, and it was going like this.
Wow.
The reason I'm sharing that is because what's the likelihood of that happening in real estate?
I mean,
What's the likelihood of you waking up one morning and saying, "Where's my house?
Yeah, yeah.
Where's my property? Where's my 100 units?"
yeah, and I don't think the 100-unit property is going to get hacked into.
It's not gonna get hacked.
in the near
Maybe it's a
future.
fire.
Yeah.
Maybe you lose some of them, but that's
Right.
when you have 100 units, maybe
Right.
one unit will get on fire.
Right.
Okay, you have no income in one unit, but you have 99 other units giving you cash flow.
Yeah.
So that's why it's important to understand the asset class, the people behind it, the strategy. Most important, what are you afraid of?
Yeah.
What's your fear?
Yeah, 100%. And try when it comes to fear. I mean, we talk to a lot of people. You know, name like 2 or 3 things that we run into that investors continue to do that we see because of the fear that they've got, that are kind of what I would call tells or kind of signs that they're kind of fearful of doing anything. What are maybe 1 or 2 things that you see investors doing?
A lot of times you get, the first of the month or the first of the year comes and they're hammering you with, where's my P&L? Where's my income statement? Where's the balance sheet? And it's like, okay, it takes time. This is real estate. This is a long game. It's not crypto where I can just show you, hey, here's my account. And you can tell they're a little nervous because they don't see where their money is right now, right here. Where's it going? And it's not even our personal investors, but just in general, a lot of investors fear, the politics and especially the local politics as well. And that comes up in the conversation a lot. What do you think is going to happen if XYZ stays in office or what happens there? And, we tell them that it is what it is, really.
Put it this way, are people going to leave the country
Right.
if Donald Trump doesn't get elected?
Right.
Most likely the tenants that you have right now, if he doesn't get elected, they're still going to have to pay you the rent.
Right.
Okay, if Biden doesn't win and Donald Trump is elected, are the people who are supporting Biden saying, I'm going to leave the country? No. So either way, they're going to have to still pay rent. Now, the value of the property
Could plummet a
will be
little
different,
bit.
but then that's when, again, long-term or short-term.
Right.
If you're looking for short-term, maybe you should dabble in crypto. You could win fast and lose fast, and you definitely be secure. You watch your money every single day. But one day is there, one day cannot be there, right?
Right.
Real estate is kind of like, I heard a mentor tell me, Raul, you could get rich fast. People get rich fast. Wealthy takes time. To create wealth takes time. So if you're not patient, you're never going to be wealthy. That's what I believe, investing in projects of 10 years, no less than 10 years. I just recently sold, I was telling you, about 10 years ago, I bought a property for $60,000. We just hold it for $500,000. I wish I would have bought more. Back to the question, when's a good time? Now.
Yeah,
if you can
right.
afford it, buy now. I wish I would have bought 20 of those properties.
And I'm interested in the beginning of your real estate journey. You said you read basically half of Rich Dad Poor Dad. How much did you understand the market before you went and got your first loan?
Zero.
Right.
Zero.
You
So-
just went in and did it like that because you figured now's the time. Why wait?
Because I have pain. I saw my boss, he was an asshole. I didn't want to become my boss. And how I figured out this book says, hey, you invest in real estate, you're going to get rid of your job.
Right.
I went all in. And I think now it's easier than ever before. Before, I had like 5 co-signers. I had my mom to co-sign, my aunt to co-sign. I think like the cleaning lady in the house, somebody, we had like 10 people on the closing table to buy my first property. Right? Now it's so much easier.
Yeah, yeah. And, for everybody, there's never really what I would call a wrong answer because everybody's got their thing, in terms of how they decide to move forward with real estate, what kind of property type. So there's really never any wrong answers, but we all have or know of what I call the Uncle Joe story. And so the Uncle Joe story is, remember Uncle Joe? He had a chance to buy that property for $50,000 15 years ago. He thought it was too much money, decided it was way overpriced. And then, of course, Uncle Joe finds out now that it's worth, $3 million today.
Yeah.
Everybody has or knows of those Uncle Joe stories. And what I like to tell investors is there are no wrong answers. But you don't want to be in a position where you're telling yourself your own Uncle Joe story 10, 15, 20 years down the road. And we hear those Uncle Joe stories, Trot and I do, quite a bit too.
Yeah, all the time.
So I think that the problem with most people that they have, that the reason they don't invest is because they're waiting to time the market.
Yeah.
Right.
Like the last 10 years, you know what I'm hearing? I'm gonna wait till the market goes down.
Right.
How's that
Right.
working for you?
Right.
Right? If you've been sitting in the silence for the last 10 years, you lost a huge opportunity. Now, what's gonna happen the next 10 years, we never know. It might go down a little bit, it might go down, even if it goes down half, you wasted the most important asset that you had, time. So that's why the currency is not money, the currency is time. How much can I buy my time back? So every investment that I make for me now is like, okay, if I invest on this, how much time am I gonna buy back in my life?
Yeah, 100%, 100%. I would love to go on for 3 more hours, and we could go on for 3 more hours. But look, I know your time is valuable, man. So let me kind of wrap this up with one last question for you. Based on your experience, not only on the entrepreneurial side with what you've done, what you've been through, not only with the entrepreneurs that you coach, but with all of that real estate experience, that real estate experience that you've had, looking at what's going on out there today, give our viewers and listeners maybe 1 or 2 pieces of advice that you think could just be really, really, really impactful for them.
Number one is don't panic when the market goes down.
Oh, it's awesome. Yeah.
I made the mistake when the market crashed. I panicked, and I sold a lot of properties that I lost. It would have been a whole different story now if I would have just had somebody tell me that. Hey, Raul, chill out. Don't panic. Give it 5 years.
Yeah.
All right? No, next year it's going to be, no, give it 5 years. It's going to be fine. Banks will work with you. Second, understand that the banks are not in the business of making you money. They're in the business of taking money from you, right? So now if you want to, like what we talked about, there's alternate financing opportunities. Right now, money is expensive. It's okay to get expensive money as long as the deal works. Don't be rate driven. If you're long term, just know that the interest rates eventually will come down. You could refinance, and you could that's what at the beginning I wish somebody would tell me that, hey, the rates, even though you're getting a 30-year fixed rate, you're not bound to 30 years. If it drops, you could refinance. But if you get a variable rate, in that short term, it could be a problem. But don't be just rate driven thinking about the rates. Pay attention to the long term. The third is make sure that you vet the people that you're working with.
Yeah.
I've heard so many
100%.
horror stories being in the industry, like people who thought they owned property, they really never owned the property. There's a guy that was a guru that he reached out to me saying, I want to be in your podcast. And I checked him out. He was legit. He was like, man, he was killing out there, doing seminars. He was having thousands of people following his advice. Then now he's going to jail because he was raising capital, selling the same house 10 times.
Oh, my gosh.
With smart people, with celebrities, with athletes, not like people that don't know what they're doing. Even the smartest people, they trust too much. Bet the people, go down to the property, feel the property. Don't just assume that because they're celebrities, they have you back.
Man, that advice is so solid. I can tell you, I wish I would have had that advice 30 years ago. I wish I would have had that advice 20 years ago. So it's very solid advice. I mean, not only for me, but I know for a lot of our viewers and listeners, that's really, really solid, man. Thank you very much. Thank you very much. Again, I don't want to wrap this up, but we are going to. It's been a great episode with you, brother. Thank you for being with us. Will you join us again? I hope.
Absolutely.
Awesome.
Absolutely. We'll do a documentary in your neck of the woods. Next time I'll be in your neck of the woods.
I want to have you back because I got more questions to ask you, and I know Trot's got more questions that he wants to hit you with, and we're going to do that, okay? We're going to do that. But for now, birthday boy, we're going to wrap up this episode of the Heartland Multifamily Show, the place
For all things multifamily.
And again, if what we talked about on this episode with Raul resonates with you, if you got some good value out of this, make sure you click the subscribe button so you can make sure you don't miss out on any of our future episodes. Thank you again, man.
Thank you,
Great having you.
Outstanding.
If you enjoyed this video and you want to make multifamily a bigger part of your investing world, make sure you click here on this video to discover the 3 easy ways to invest in and own your own multifamily property.